Welcome to the newest edition of the Mind, Money, Motion podcast. I'm Marie Burns, and my goal for my listeners is to leave this podcast with 3 action items for you to consider implementing into your life. Because my philosophy and belief is that the more we take care of our mind and our body, the less we have to worry about running out of money. So all of my guests and topics are focused around those 3 areas. And today we have a guest approaching us with some great ideas and experience from the money aspect of life. Tony Steuer is an internationally recognized financial preparedness advocate. He's an award-winning author, also a top-ranked podcaster, and a speaker who is definitely changing the way we think about money. He's an advisor at Insurance Nerds, Paperwork, and Dingo Technologies. And he's also a member of the Think Advisors Luminaries class of 2022 as a finalist in Thought Leadership and Education. Welcome to the podcast, Tony. I'm excited to have you join us today.
Yeah, I'm glad to be here again, Marie. Thanks for having me.
Absolutely. We never run out of topics when it comes to money. Things are always evolving in our lives. But I think one of the good news pieces is that there is a little bit more awareness of the need for financial education, the lack of financial literacy. That's not the good news part, but the bad news. But at least there's more interest in that whole area. And I know you and I have talked a little bit about the whole goal, really, for those of us in the industry, is to help people achieve what we call financial wellness. And so in this era of using some of these chat bots, right, with AI out there, I thought I'd kind of get us into the topic a little bit with sharing the definition of financial education, financial literacy, and financial wellness. And then you can kind of give us a real world perspective maybe on what you're seeing in those areas since you're so involved in the financial literacy space. So if we think about financial education really as the learning piece, it's the broadest term. It's the actual acquiring the knowledge and the skills about personal finance. So maybe it's a workshop or an article you read, those kinds of things. Versus financial literacy is what I call the practical application piece. It's now that you have the education, you have the ability to actually apply what you've hopefully learned to your own life. So whether it's related to investing or saving, it's you actually doing. And then financial wellness is more the feeling that we hopefully get at some point because we've implemented some of these things that we've learned. So, Tony, I know you have some thoughts on the use of that terminology and maybe trends or things that you've learned about the literacy side of things versus the wellness side of things over time.
Yeah, so, it's such a huge question. And I think the challenge has been is that these terms are being used so frequently that there's not really a commonly agreed on definition. I love how you defined it because I think that's part of it. I think part of it too is that something like literacy, people don't want to hear that they're illiterate about something.
Right.
And so I think there's some of the terminology, even with financial education, even if people don't know something, they don't want to be told that they're uneducated.
Mm-hmm.
And I think wellness sounds too touchy-feely for some people. So I think as an industry, we've been trying to figure out, well, are we financial literacy? Are we financial wellness? I mean, I'm using financial preparedness now, so I'm not a great example for landing on one, but I think,
yeah.
That it's really about helping people come to terms with their money. I think in so much rather than using all these terms that I don't think consumers really get or care about. I don't think consumers are going, oh boy, I need to increase my financial wellness today. I think that as an industry, we tend to take these words and expect everybody else to learn our language. And that's the whole reason we need financial literacy in the first place, is because we're an industry that's steeped in jargon and terminology.
As every industry does, unfortunately. And so we try to become the translators, right? I know myself, I've tried to shy away from even saying finances and finance to just money life, because everybody can relate to money versus finance. We don't want to imply that they don't know something about whatever aspect of finance that we're trying to talk about. But so tell us a little bit about your podcast. You've had a great history of talking to really financial literacy leaders over the years. And what trend are you seeing with the whole need for financial literacy education, whether we're calling it the right thing or not?
Well, I think I've been fortunate enough to have some amazing guests. Recently celebrated my 100th episode, so very
Wow.
excited. So I've talked to, probably at least 125 guests on the show so far. And the show, I've tried to really focus in on people who are changing the way we think about money, because I think that's really the point that we need to think about is like, how do we change the conversation, the way we think? Is I love what you said about being a translator, because that's how I always thought of myself as a consultant, is more of a guide, helping people understand their options, what's going on, rather than telling them what to do, is because then they're much more vested in it. So in the podcast, I seek out people for guests who are doing that, who are helping to help people understand rather than just talking at them. So that's really the difference, is that my guests are people, hopefully, who are not talking at people, but who are helping people to understand on their own terms.
Well, and you come from an interesting background, as do many in the financial services industry. It's often our second industry for whatever reason, but you have an insurance background and you have several acronyms after your name. So maybe you want to share a little bit about that and the whole way that really is included in. And many times we don't think about, if I say money life, probably that's not really encompassing enough, because insurance should be part of our personal finance journey too.
Yeah, and I think insurance is oftentimes left out of the conversation. If we look at somebody's budget, your homeowner's insurance, your medical insurance, we tend to forget about how much we pay for our health insurance, because it often comes out of our employer's paycheck. Our employers are paying for it. But between all the different forms of insurance we have, is sometimes that can even exceed our housing payments on a monthly basis. So we tend to not think about that. And I think that in the money world, just like with anything, you tend to get focused on one or two things, and it becomes focused upon their retirement number, which of course is super important. Or they become focused on their rate of return on specific investments, rather than, like with their investment portfolio, thinking about their diversification, their asset allocation, all the other things. So I think that's a big part of it, is coming back and focusing on one or two things.
The whole idea of breaking it down so it's not overwhelming, the whole habit kind of concept that I'm a big fan of, because as well as I do, we can learn and have intent about all of these things, but until we break it down into individual steps, which is what you've done with a lot of your resources, and we'll talk about that in a bit, to make it more likely that people actually take action.
100%. And that's where, coming back from the consulting background, is I don't think I got quite enough in answering your question, is that I learned over the course of time is that people make decisions for their own reasons. And that sometimes the reasons defy logic. And I'm sure you've seen this in your practice as well. And that you have to understand why people are choosing to make certain financial decisions, which gets back to habits. That if people don't have the right financial habits, which we don't learn in school or anywhere else, they're going to make financial decisions that we may question as experts and say, well, why'd you do that? And it's like, how can we expect somebody to have made a different decision, because we're not helping them to make better decisions? And like the big one that I learned was to lead with challenges and solving challenges first rather than product first. Is, life insurance is a very product dominated industry. You go in there, you're going to talk about this product and you're going to fit that square peg into the round hole, whether or not it's going to fit. And really, when I took that and I really started to apply it across the rest of the financial services world, that's what really struck me, is that we're not talking about those habits and getting people to think about their goals, which is more of a habit than about talking about product first. So that's where the approach came from.
I think the whole problem solving makes sense. It's the pain point, right? If we all think about what's our most pressing stressor at the moment. Finances are still listed as the number one stressor for Americans, but it might be budget for this one, it might be debt for that one, it might be investing for that one. I mean, pick one, right? Of all of the areas of financial planning, could be very different for everyone. So I'm curious too about, if you think about your conversations with your guests, how long have you had your podcast? For a few years now, or?
I think, yeah, I think this is the 5th year.
Okay.
Started in 2019.
And so I'm going to throw out two questions at once, or answer them how you
Okay.
Is there anything that has become very surprising for you to hear from your guests as a general consensus, or maybe even a one-off? And the second question is, I'm assuming that there's kind of a few confirming trends or a few pieces of advice that have kind of come up and resonate with what we hope that people take away from, if nothing else, you should at least focus on or act on these 3 areas.
Yeah, well, I want to hit on more something general before the specifics. And the biggest learning I've had is, because fortunately I've had a very diverse range of guests on the podcast, is that socioeconomic factors have a huge impact on financial literacy. Is, for example, one of my guests, Romy Pickron, enlightened me that Black women carry the highest percentage of college debt. And, another guest, Fong Long, talks about, that if you grow up in a home that, doesn't have access to many services, the parents are at home at night to work with the children, the parents argue about money, all these different things, is that if you have all those things, people are going to be starting behind everyone else. Louis Burjas also talks about this. He does a lot of work with Latino families. He's one of the first Latino CFPs, and he talks about this as well. And I think that's something that we don't think about and talk about as much as, we're in that mindset where everybody is the same and they need to buy this product, rather than taking a look and saying, okay, well, is there something else going on for this person where we have to help them address one issue before we can even start to talk about, let's say, a 401k. If you're fortunate enough to grow up in a household where your parents are investing, my parents talked about investing. My dad talked about stock with me. So I was fortunate. I knew something about stock. But if you grow up in a household where your parents can't afford to invest, or you grow up in a household where, with Romy, is where she was a Black woman and she had to carry more college debt because her parents didn't have the money to help her out, that's the biggest learning, is that we have to recognize that people are coming from all these different places. And so we have to be willing to be flexible in our guiding and adaptable to helping them find the solutions. That's my biggest learning, is that, it just reinforces, if you look around a room, we're not all alike. And
thank goodness.
And there's no one size fits all financial service or product. Now, with that said, there are 2 things that come back pretty much, I would say, from at least 50% of the guests. And one, start saving early. Start saving early. Start saving early. and then start saving earlier. You know, and take advantage of the magic of compound interest.
Mhm.
I would say probably at least half of my podcast guests talk about compound interest at some point. And
Mhm.
basically, the concept is that the longer your money has to grow, the
Sure.
more it will grow. And maybe we can link to this in the show notes. But if you take a look at Warren Buffett's wealth, the majority of his wealth has come in the last 20 years.
Mm.
It wasn't, he didn't, I mean, he's been very wealthy for a long, long time, but the immense amount of wealth he has just been in the last few years, and that's
Mm.
because of the growth of compound interest. So that's
Mm.
the big thing for people to recognize. It's, if you start investing early, it's going to pay off for you, but it's not going to pay off for you today. It's going to pay off for you 30 or 40 years down the road. And so you have to play the long game.
Right.
And so I think that's one of the biggest learnings. The other learning is that you want to balance long-term accumulation with short-term enjoyment of your life.
Mm.
I've had some people on my guests who were very accelerated with a FIRE movement, financial independence, retire early.
Mhm.
They put a lot of money aside. They worked super hard, but they didn't get to enjoy those years
Mm.
because they were so frugal.
Mm.
So it's finding balance is also something that's important. And then the other one too is managing debt. Is people don't realize the cost to their long-term financial health of not properly managing their debt. And it doesn't mean that you have to pay off all your debt tomorrow, but that you can be smart with your debt. And maybe, if you're paying 10%, well, you'd be paying a lot more than that in credit cards, maybe consolidate them into a lower cost debt so you can lower your debt expense. So those are the big learnings that I've had from my guests.
Awesome. 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 Well, I would agree wholeheartedly with all three of those. And I think what's even cooler than that is your whole approach about getting ready and the whole financial preparedness lends itself to having all three of those as a result because you've thought about and put some things in place. So let's spend the rest of our time really sharing with our listeners the tools and resources that you have for them to take small actionable items to get ready for their money life, their financial life.
Yeah, so I'm not sure the best place to start, but the best resource I have that anybody can do is they can join the Get Ready movement, which is basically get my weekly newsletter where I have the weekly action item. And how I've tried to break it down is that there's one small weekly action item that you can take every week to help get your financial life in order. And the goal with that is to make sure that you cover everything every year. But if you miss something, no big deal because you're going to come back to that area next year. The thing is that I'm trying to get at the things that oftentimes fall between the cracks, like reviewing your checking and savings account. Is like so many of us have had the same bank account for 20 years, and now we may be paying ATM fees because the banks closed down all the local branches.
Mm.
So you don't think about that. So you just go, I'll pay that $3 fee. Maybe I'll pay it a couple times a month. And maybe it's not that much, but all of a sudden you're paying $100 a year in bank fees where it'd be pretty easy to switch to a different bank and not have those bank fees. And, granted, $100 a year isn't going to help you, but if you're hearing to give up your daily coffee, bingo, there you go. Maybe that helps you get your daily coffee back, where you don't have to sacrifice the things you love. And that gets back to actually what I was talking about earlier is balancing out your joy today with your long-term financial health. So, that gives people a daily action item. They can become a Get Ready Insider, get access to fillable worksheets. I also have worksheets that people can fill out about different investments, things like that. So you can notate all that information. And you and I do a lot of similar things, and we're starting to partner on this, is because it's so important to have that inventory, not only for yourself. Is part of the reason I started doing it is that, I got tired of applying for a loan is, okay, what's my account number over here? What's my account number over there? So, I wanted to inventory all that stuff so I
Mhm.
could have it all available. And, I encourage people to do it for yourself, because when you're doing all these things or you're seeing a different advisor, I have a spreadsheet now where I have everything, and I can look up everything. I can look up a prescription number. I can look up, the password on our Netflix account. But the best thing about the spreadsheet is if something happens to me, my wife and my son know that I have the spreadsheet. I've shared it with them. They can access any information immediately. So they don't have to figure out, like, okay, well, does he have a bank account over here? How do I get into the bank account? Or what's our credit limit over there? And so, I've tried to help people break everything down into really small steps so you can keep up to speed on all these different things, because it's so hard to manage this. We have bills coming in all the time. We have insurance policies. We have open enrollment at work. We get, you know, our tax bill and all this stuff. And it's like, I just want to help people organize it
Mhm.
and then monitor it, because that's the biggest problem I've seen in the financial services field is monitoring things and reviewing things. So many times people set and forget financial service and product. So, I bet a lot of listeners can identify this. When it comes to open enrollment, how many times do you change the different things on your open enrollment, or go, you know what, I'm just going to go with what I did last year? Because that's, you know, I don't even understand all these options. But taking the time to review it with a little bit of a guided review means you might change those things on your open enrollment. So that's where I'm really trying to go with this, is help people to organize it and monitor it, but to do it on their own terms with the education to be able to do those things successfully.
I know, and you're very much like me. Like you said, we try to offer things that speak to different people. You've got books, you've got the newsletter with the weekly habit, you've got worksheets. So whatever tool works best, but it's truly you can't set it and forget it, but you have to set it. You have to get it organized. You have to do the work once and then just monitor and update. So much easier and quicker after that. So um, you want to just wrap up here with the best place to look for you online, or ways to contact you, and certainly we'll put all of this in the show notes as well.
Definitely. Yeah. So my website is a great way to get hold of me. I'm very active on LinkedIn, as well as sort of on Instagram. You can find me on Instagram, and I post my podcast episodes on there. And every once in a while, I do other stuff, but that's definitely where I'm at right now.
Awesome. Well, like I said, we'll have everything you need to just click and search in the show notes. And Tony, I appreciate your time and want to give kudos to you to keep doing what you're doing, because I know you're reaching more and more folks with this crucial, really, goal of changing the way we think and act about money. So thank you so much for all you're doing.
Well, thanks, Marie, and I appreciate the opportunity to collaborate with you, and I appreciate the work that you're doing as well.